Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters Podcast. I am going to talk to Mr. Henry Daas today. Henry is a business and finance coach. I do want to learn from him a lot about finance as well as business today. He published a 432-page book on everything you need to know about how to grow and manage your money. And I'm looking forward to learn that and read that book in next 30 minutes. So welcome, Henry.
Hey, thanks for having me.
Absolutely. Tell us something interesting or funny about yourself.
Interesting or funny? I tell you what, one of my hobbies is I'm a screenwriter. So I've written 11 screenplays. No, none of them have been made into a movie. Hollywood, I have placed very high in contests, including one done by the Oscar people.
Wow.
But it's really, it's one of these things that my friends say, don't quit your day job, dude. It's like, good luck. But
you never know.
It's a lot of fun.
It could be the next Iron Man movie. Come on.
I have no idea. But it's a lot of fun.
Yeah.
And, it actually comes in really handy in business, in writing. The 3-act structure, being able to tell a story and have interesting characters. There's a lot to be learned from, movie structure and stuff like that, just for basic storytelling.
No, and I think now it makes sense that you wrote a 432-page book and self-published it because you know how to write. I
know how to write. Yeah. In fact, I was on a podcast 2 weeks ago, and the guy actually had the hard copy of my book, and he held it up for the video. It's like, don't do that, because it's like the size of a phone book.
Yeah. It must be huge.
Let's face it, people don't like to read. It has a lot of infographics in it.
Yeah.
So it's one of the things that makes it, it's got about 250 infographics. So,
no, I got to take a look at the book. I love reading.
Good. I'm glad you do.
Tons of books. I need to go through, but I'll definitely take a look at the book for sure now.
Mm-hmm.
So, Henry, do you invest in real estate?
I have invested in real estate. I'm not currently invested in real estate, but we're talking about it. My wife and I, we just bought a new house. We bought this house in Connecticut. We hadn't bought a house in almost 20 years. It was eye-opening. This market is a little overheated.
Things have changed, right, in 20 years?
I don't know about that. The market when we bought last time we bought was pretty overheated.
Right.
Then the market fell apart. When I was investing in real estate, it was the 2000s, the aughts.
Yeah.
I wrote about it in my book. It ended badly. My business partner committed suicide, and got sued by everybody and his kid brother. And then the Great Recession came, and the bottom dropped out of the real estate market. So,
yep.
I've got some more stories there. But I tell you what, a lot of ways to make money in real estate, a lot of ways to lose money. But now with prices being a little high and just a little overheated, money's cheap, certainly. 3% mortgages. My wife said that's high. I'm like, Oh my God.
You don't know the historical rate then.
Yeah. Well, when you consider the first place that we bought 30 years ago, and we've been together 32 years, it was 7 3/4. And I felt like I died and went to heaven with that rate, because that was a good rate.
Right.
3 years ago. But now we've gotten spoiled. Right.
Yeah.
Anybody loans money for that little. I mean, it's crazy. It's almost absurd. But
they lose money. Yeah. So you reminded me. I bought my first house in early 2007. Still, market was heated here in Bay Area,
yep. Mm-hmm.
And I had 2 mortgages. The first one was 6.25. The second was 8.25. And this was 5 1 arm. 30-year fix was over like 10% or something.
I had a 5-1 arm on the last house I bought. It was a no income verification.
Right.
$1 million mortgage, no income verification.
Wow.
I'm like,
That's
wow, that's really dumb.
that's what
you loaned
caused
me
the
that
entire
money.
thing, right?
You wonder why things ended badly. So,
Right.
yeah, things are not so crazy now. But there's just this house that we bought. There were 10 bidders within 24 hours, and the only reason we got it was we bid over ask.
Oh yes.
And we paid cash. So those two things sealed the deal for us.
Right.
But not everybody can do that.
No.
It's tough.
I just read this morning that there was a house in DC.
Mm-hmm.
It sold 150K above asking, and the asking was only 450K in cash, and there were 76 all cash offers, no contingency.
76
total
cash.
88 offers.
My God.
So this is how overheated it is everywhere in US, and
it's crazy.
I don't know how it's gonna end, but let's see.
Badly would be my guess based on experience, because anybody who's out there who thinks that the market can only go up. The first place that we bought in New York City in 1992, we bought a loft in Greenwich Village, and we paid $300,000. I don't mind sharing the numbers; it's ancient history, but we paid $300,000 for that loft. It needed a gut renovation. It was like everything that we could do to scrounge together, $300,000 at 30 years old. And people had paid $450,000 in 1986. Right, bottom fell out of the New York real estate market, and they took a huge haircut for that. And I think they were happy to get out. Really. So it ebbs and flows.
Yep. So what was your first investment and how did it work out?
My very first investment, I was 17 years old. I was in high school. It was the 1970s. I bought 50 shares of Chrysler.
Oh, okay.
And the reason I bought it was, one, they were about to go bankrupt, and Lee Iacocca came in, and the government said they were going to backstop them, and the price of the stock had gotten hammered.
Right.
And I said, well, if the government's going to backstop them, it's not going to go to zero. So maybe I can make a couple bucks. And I made a couple bucks. But I got to tell you, it was very expensive to trade back in the day. You had to trade through a broker, $50 commission
every
to buy.
Time you trade, buy and sell, right?
$50 to get out, and Merrill Lynch, odd lot charges, things traded in eighths. That's 12.5 cents.
Wow.
For those doing the math at home, and not pennies like it trades now. I don't pay anything for commissions.
No, almost zero. Almost no brokerage is charging commission.
And when I wrote the book, I guess it was it was 2018 or whatever. At the time, they were still charging commissions, and I wrote in the book. I said what's called slippage. The cost of trading had gotten close to zero. I said pretty soon it'll be zero, and then like a year later, it was zero.
That's awesome. So let's talk about financial intelligence. What is FQ?
All right. So my original idea was I wanted to teach financial literacy to like millennials and teenagers and stuff. I have a niece and a nephew. I was trying to teach them about money, and it was pretty much an abject failure. They weren't ready. I wasn't ready. And so I did a lot of research. I read a lot of books. There was a lot of stuff talking about financial literacy. I'm thinking, what is literacy? Well, literacy is the ability to read or write. I said, well, that's only going to get you so far. What's intelligence? That's taking all the tools that you have and actually making smart decisions and creating new knowledge with it. So to me, it was it was much bigger than just knowing the nuts and bolts, but really how to put it all together into a sustainable kind of your own personal financial philosophy that you could carry, till the day you die. Because you're never going to get a break from money, right? It's there every day of your life.
Right.
You never get a day off. Maybe if you win the lottery, but even then you'll have to figure out where to invest your money and how to keep people from stealing it from you. So it's a 24/7 occupation. So you want to be intelligent about the decisions you make.
Oh, I can attest to that. I have made a lot of stupid mistakes in my investment journey, but I call
So
them
have
as
I.
educational experiments, right?
Yeah, that's one grand rationalization that we all go through, right? It's
Yeah,
like you buy a stock and immediately plunges. I'm into it. I'm in it for
exactly.
the long haul,
Yeah,
right?
yeah, yeah.
Instead of just saying, oops, I think my research was
Oops,
faulty.
I
I
did
made a
it again.
mistake. I better just get out, lick my
Right.
wounds, and live to fight another day.
No, that's a great advice, and that's exactly what I do. Every time I feel like I made mistake, I'm just going to call it quits on that side, and put it in my books that this was the lesson I learned, right? So the next
I
time I
wrote
don't.
about a lot of lessons.
Yeah, yeah,
A lot
exactly.
of like really, really stuff that doesn't necessarily reflect so positive on me. But you know what? I'm here to talk about it. So I
No,
must have done something right somewhere along the
no,
line.
that's great that you shared all your experiments and experiences in the book. So let's talk about how can one develop good FQ, financial intelligence. What are some of the steps you would say that they should take, or what are some of the traits they should have?
Well, first thing is you have to want it. So the reason that things didn't really work out well with my niece and my nephew is they were sort of interested, but they really weren't gonna do all the work.
I
Right.
see.
I mean, I manage their money for them, their money earn accounts, and I manage some money for only for family members. And it's like, my wife is like, why don't you're so good at it? Why don't you manage money for other people? It's like, I don't want to get called every time the market has a hiccup because that's
Yes.
what happens. It's not worth the headache for me. So they weren't in the right mental frame of mind to do the work. I'm an old school boomer. I'm not gonna go out there and write a book that says, here are shortcuts for how you're gonna do all this stuff. I think it's disingenuous. There's just no real shortcuts. You got to put the work in. So if you're gonna put the work in, you got to want to do it.
Yep.
Right? You just have to. You have to be motivated. And then you have to understand your own what I call the psychology of money. It's the very first chapter of my book, The Psychology of Money. Where are you on the spectrum? Are you living in scarcity? Are you living in abundance? Are you living somewhere in between? Or do you not have any idea where you're living? Right? Or are you living
Right.
paycheck to paycheck and you're not even thinking about it? Right? You're just grinding through saying, how am I going to get through another week? How am I going to pay my mortgage?
And
Right?
sorry to interrupt, but I think that's a great point, because you have to be honest with yourself.
You
A lot
do.
of
It's
time,
tough.
you are living on paycheck to paycheck, or even on credit cards, and you're like, oh yeah, but I can afford this, right? And that's the biggest problem we have in America.
It's a huge, huge problem when you look at student debt. I mean,
Yeah.
I dove into all of those things: credit card debt, student debt, interest rates. I'm not a big believer in personal debt, even though I just took out a mortgage. Yes, it's hard to buy a house with all cash. Right? It is. It's tough for
Yeah,
most people are not going to be able to do it.
it
I
is.
paid
Yeah.
all cash, and then afterwards, I did a mortgage.
Yeah, yeah, just turn
Right?
it around and get the mortgage. Yeah.
Because the money was at 3%.
Why
Right?
wouldn't you?
I mean, at the risk of sounding braggadocious, over the last, say, 10 years, I've been averaging about 15% return on my money. So if I can borrow it for 3% and get 15, even after I pay taxes on it, I'm still out ahead.
Yeah, yeah,
Right?
that's called arbitraging, right? That's the key, right? You got
It's
to
called it's called
arbitrage.
OPM, other people's money, is
Money,
what it's
that's
called.
another,
Right? Yeah.
yeah.
Yeah,
Okay.
arbitrage is a fancy term for it, but basically it's
Right.
OPM, other
Yeah,
people's
yeah.
money.
And
Are
actually,
there
it's our
risks
money,
involved?
right? The
Sure.
bank which is lending, it's our money. That's why they don't pay you any interest.
Yeah,
Right? When
exactly.
we put the money in the savings account, it's 0.01%. I'm like,
I get 10, yeah, I get 10 basis points on my money.
exactly.
It's almost a joke. It's like, why bother? It's just
Yeah.
messing things up when I balance my checkbook. So I think it's important that when you start, you think about your tendencies, right? Um, are you super frugal? Nothing wrong with that. But then on the other side of the coin is, if you're lucky, you're going to live 80 years, right?
Right.
You want to enjoy your money, right? What do you have it for? What do you go out and earn it for? Right? You do it so you can pay other people to do things for you.
Right.
Right. I mean, we're moving. Funny thing is we did most of the move ourselves.
Wow.
And we hired a professional to move the furniture, and everything else we moved ourselves. But this is the 6th time that we've moved in 32 years. So we've learned a lot. And each time we do it, we try to do it a little bit better. The last time we moved, we hired a guy, and it cost us way more money than I ever wanted to spend. So we're always fighting the last war. I'm like, well, I don't want to do that again. Right. I don't want to make the same mistakes. I want to make new mistakes. Right.
Yes.
It's called experience.
What are some of the barriers in developing good FQ?
I'm sorry. Say that again.
What are some of the barriers one would have if they are trying to develop a good financial intelligence?
Oh, what are some of the barriers? Most of the barriers are self-created, right? Chasing the new trendy thing, right? I run a mastermind in investing. So we've been talking about this GameStop stuff that went on with that stock. We've been talking about SPACs, right? We've been talking about Bitcoin and Ethereum. Yes. We've been talking about NFTs, non-fungible tokens. Right. In fact, I'm writing my April 1st newsletter that I put out. So I'm going to write I've been writing a little treatise on NFTs, right? So no, leave that for other people.
Yeah.
Just leave all of that stuff at the sideline. Real estate, great investment. Does it come with a lot of hair in the deal? Sure it does, right? Stocks, bonds, commodities. There are lots and lots of places. Find what you're interested in, right? I had to sit down a couple of years ago with a young guy who buttonholed me at a conference. And so we had dinner together, and I'm going through all the various investment stuff. And he says, you know what? I really like real estate. I said, then do that, right?
Right.
If that's what you're interested in. Now, talk about a barrier. What if you're not interested in any of it, right? What if you just don't want to do it? I don't have an answer there. You can hire somebody to manage your affairs for you, but then you got to ask yourself some fundamental questions. Do they have my best interest at heart? Right? Am I going to give them power of attorney? I know my parents told me some stories back in the crash of 87 with friends of theirs who'd given a broker power of attorney, and he lost all their money.
Wow.
Their entire nest egg. They authorized it.
I don't trust the fund managers. They never put their money where their mouth is. Unless they are investing their money, I wouldn't pay them my fees.
And the guys on TV, they're prohibited from investing. Yeah. Right? The Dorfman rule. So you'll see Jim Cramer, and I like Jim Cramer. In fact, I used to see him on the street. He was a neighbor.
He's an entertainer.
But he's an entertainer. He is forbidden from investing in any of the things he's talking about.
Right.
So that is entertainment. Now, there's a lot to be learned. Like I told this on a previous podcast. I'd never heard of the company Lululemon. And I happened to see his show many years ago. And I'm like, what the heck is this company? And then I asked my wife, and she just rolled her eyes. It's like, where have you been? Yeah, where have you been?
Almost every woman knows about Lululemon.
I'm like, you're a dope. And so I started doing some research, and I bought their stock, and I made some money on it. Now, I didn't buy it on his recommendation. I had never heard of it. And I wasn't a sector that I really had focused on. I focused on pharmaceuticals and technology and telecom and other sort of stuff. Women's fashions, no, not really on my radar. But then I did the research and said, this is a really good company. They're making money. Let's buy that.
So that's great. So let me throw you a curveball, because you mentioned about your investing mastermind and the newsletter. What are you? Because we know, and as you and I discussed even before the podcast, that real estate is at all-time high. Stock market, everything is at all-time high. What are you currently looking at to invest in, right? Or are you even going to invest in your future, or wait on the sidelines?
Well, I've been moving to a higher than normal cash position for the last several months. So so I'm probably over 40% cash on my portfolio now, which is pretty high.
Right.
Last time I was that high was when Trump got elected. I was pretty bearish on that, and
yeah, me too. And it backfired on me.
I left some money on the table. I'll be the first to admit. Yeah, I did. I still did fine. I don't really compare my returns to the market returns. My returns are the returns that I'm trying to make, not what some arbitrary index is trying to do. I couldn't care less. I want to make this amount of money at this level of risk. So I determine that. But when things are frothy like this, and when everything is really overbought in whether it be real estate or commodity, gold went up to close to $2,000.
Right.
I have physical gold. I probably should have sold it, but I didn't. Right. It's the gold coins. I'll let them sit for a while because if I sell them now, I got to reinvest them into something else.
Yes.
So there's an old saying that you can't time the market, and I disagree with a lot of those types of sayings. I would say it's really, really difficult to time the market, but as a trader, that's all you're ever doing, right? That's you are attempting to do it.
You're trying.
Problem is it's tough.
Yeah.
Right. You want to buy low and sell high, or you want to sell high and cover low, right? There's money to be made on both sides of the trade. But for now, I've been pretty neutral, kind of waiting for the new administration to shake out, kind of waiting for coronavirus to shake out a bit. I'm a little worried about inflation. I'm a little worried about interest rates popping a bit. I just had a conversation with one of my coaching clients today about that. He's about to build a very, very expensive house. And it's like, you may want to think about locking in that low rate now.
Right.
Because we've printed $5 trillion in the last 12 months, right? Think about that. That wasn't raised by taxes. That was printing presses running 24 hours a day.
Because we have infinite money.
Yeah, we have infinite money. But somewhere along the line, now, as well as I do that most of that money is going to get sucked up by the 0.001%. I know that sounds cynical.
That's how
but that's
exactly
but that's how it works. They are the government prints it out and they have this giant vacuum cleaner.
Yeah.
And these billionaires will suck all of that money up. But even if they suck up 90% of it, that's still $500 billion floating out there in the world. Now, when you have a return of demand, when people stop hunkering down and start going back to restaurants and start going on trips, everybody is just jonesing to go on a trip. They want to go somewhere and they're going to go spend money. So that, that increase in demand, that will have an impact. Look, I went to buy some 2x4s for this new house. I was on a podcast with a guy who actually develops real estate. And I said, they were $5. I said, the last time I bought a 2x4, which was a few years ago, they were $2. And he said, yeah, well, look at the price of lumber.
Right.
$1,000 for 1,000
more than doubled in a year from
more than
March
doubled
to this March, because we are trying to. So we bought 18 lots. We are trying to build. My builder friend and I, we are trying to build houses.
Yep.
And we bought the lots from March to by September. Sure. And we saw the lumber price go crazy. Like
crazy. It's crazy. We want to do an addition and add to the deck. And it's sort of like, do I really want to pay that price? But then you ask yourself, is anybody putting a gun to my head that says I have to do this? Right. Or is this just me with some, pent up demand here? But the way I look at it is I can wait.
Yeah.
I can wait for the market to shake out. Right. Same thing with the stock market. If the stock market's overheated, I can wait for a correction, keep my powder dry and, wait for good companies to go on sale. Like, why not?
Yeah. I think that's a great strategy. So let's take a quick break. And after the break, we'll go through the same questions I ask every guest.
All right.
You're listening to the Wealth Matters Podcast. The Wealth Matters Podcast. For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Henry just shared some golden nuggets on what is financial intelligence and how can one develop good FQ. Henry, are you ready for fire round?
It's the lightning round. Let's do it.
Would you be changing any business or investment strategy after this pandemic is over?
Yeah, I think I'm actually going to get my real estate license soon.
Oh, okay.
And I think when we see the real estate market pull back a little bit, which I think is an eventuality, because markets always do, I think we'll go look for a fixer-upper, my wife and I.
Favorite real estate or finance or any other related book?
I like Peter Lynch, One Up on Wall Street. It's an older book, but it's the first book that I tell people to read. Malkiel's Random Walk Down Wall Street, another good book. Real estate book, Rich Dad, Poor Dad, right?
Of course.
Yeah,
almost
of course.
Everyone recommends that.
Everybody recommends that one. It's something I read.
It's a classic.
I think I was still in short pants when I read that. Millionaire Next Door.
That's
another
a great book too.
Another great book. These are bread and butter books, right? These are the really basic building blocks.
This is where you got to start.
Yeah, this is where you're going to start.
Yeah. Any tool or website you recommend or you cannot live without?
Any tool or website that I mean, there's so many of them. I use Schedule Once for, for all my meetings.
Yeah, like Calendly. Yeah.
Yeah, it's like Calendly, but I think Schedule Once is better. I use Pipedrive for CRM. I use something called HelloSign to do my contracts.
Yes.
It's like a DocuSign
thing.
DocuSign, but it's much cheaper. It's like $13 a month or something like that.
Okay.
Yeah, there's so many SaaS products I use MeetEdgar to populate the world with my social media stuff. So if I do a blog post, I can go and use MeetEdgar and I can send it out to LinkedIn and Facebook and all that stuff automatically. So there's tons of cool stuff. And a lot of them are just, a couple bucks a month. I just cut the cord actually, because this new house has no wire in it. And I said, let's see what happens if we cut the cord. So I'm using Hulu and Fubo. I'm testing all these things out. I tell you what, I don't miss cable TV. This is really cool. I can get it on every single device. Yeah. I couldn't do that before.
Exactly. And I can watch whenever I want without worrying about recording it. This is always available.
Exactly.
So any advice for beginner investors?
Again, old school approach. Do your homework, right? So read some of the basic books. You can go out and, if you just Google best books to read to get started in finance, and we just mentioned a couple of them. There's probably a bunch more. Think about your risk tolerance, right? Number one, right? As I've said a bazillion times before, I could teach you how to trade in the stock market. No problem. However, if you're too timid or too worried about losing money and can't get over the hurdle of ever placing a trade, it's kind of a waste of time, right? If you want to learn a skill, you need to be able to use that skill. And that takes time.
Yeah, I agree. How do you give back?
We do a lot of philanthropic stuff, my wife and I. We're more apt to donate our time and our skill. So she does a whole bunch of different stuff. I've done Habitat for Humanity. I've done lots of things. When the pandemic struck last year, for April, May, and June, I opened up my coaching practice for free to anybody.
Nice.
I put it out on a couple networks. I did, I think 100 phone calls I did over those 3 months with all sorts of different people. And I did it, out of the goodness of my heart. I wasn't looking to convert anybody into a client. It was like, come in and talk. If you want to make another call. Some people I had multiple calls with. I think they appreciate it. It's good karma.
That's awesome. How can my listeners reach out to you?
My website is Daas Knowledge, DAAS Knowledge. So if you go on that site, if you click the little button at the top that says Get My Help, you can schedule a strategy session. I offer podcast listeners a free month of coaching. So I'll send you all the links and stuff to put in the show notes. But if you go to podcast.dasknowledge.com, there's a landing page there, and we can talk about entrepreneurial coaching. We talk about money, whatever you want for a month. 4 sessions, free, no obligation, no expectation of converting you into a paying client. It's just something I do.
That's awesome. Thank you so much, Henry. I enjoyed the episode.
Me too. That was a lot of fun.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!